All right, here we go. So it is the first week of December, and typically we see something called Santa Claus rallies towards the end of the year around this time period. And believe it or not, I know, so surprising, we might be setting up for it yet again. And there's a lot of factors, a large part of which showed up literally on Friday after a very flat week, that are creating quite the storm in a good way for a lot of names. So this is going to be an extended version of the premium calls we do every single weekend. I already did send out the watch list. So the first thing I'm going to do on this call is go over the weekly watch list I sent out yesterday. Usually I make these on the calls, but I just wanted to get this out immediately. And then I'm going to give more story and more backstory as to why I'm looking at a lot of these names, which I have not talked about in years. And you can just look at them and it's pretty simple. Like, a lot of these are small caps and mid caps. There's really no large caps here. Just to talk about the technical variables on them. VRM. First of all, it's pretty similar to Carvana, and I like Carvana's chart right now as well. And apart from that, you're in the end of this wedge with classic bullish divergence confirmed on the daily. If this can just get back above 75 cents, that would be great. AMC, bullish shark on the daily with classic bullish divergence. This is the second time testing the PCC. GameStop, I would just like to see this get above and hold above these lows from the early parts of the year at 1550. If it can do that, there's room up to the 200-day moving average at 19. AI holding the 200-day moving average, bullish engulfing on Friday. This just needs to crack above 32. Beyond just needs to crack above 760. That's really its big level here. I mean, you could probably draw out a wedge there as well. Peloton, bullish engulfing on Friday, falling wedge breakout. Nikola, I don't think I'm ever going to trade Nikola again in my life personally, but I actually have spotted some nice patterns on this in the past that did play out, so I'm just going to talk about the chart. It's a bullish shark, and you're kind of getting your second low off the PCC. I guess you could also draw a little bit of a falling wedge here as well. Holding above 80 cents is probably key for that. Wish, shout out to Anna in the Discord on Friday, who mentioned this just as it was breaking out. I have a little tag over there. But yeah, it was like kind of an inverse head and shoulders, and once it cracked above 550, pretty much went straight up to $6. Now there's a 200-day moving average and this gap fill right or under $8, around 760-ish, 770-ish. Next up, Airbnb. This one's maybe a little late to the party if we look at it this way, because you kind of had like a nice week of little consolidation in this triangle, and then you broke out of it and really bounced off the 200-day moving average up 7% on Friday. But if we actually also kind of zoom out and chart it like this, then it can simply be just looked at as a down sloping channel. But what's really critical to me, I'm going to make this a little bit of a zone here, is just holding above this zone right there, okay? That's the most important step for this chart right over here. It's Airbnb. Now, I looked at a couple of weed stocks. This was probably the best looking one to me. Canopy Growth, higher low double bottom, holding previous resistance as a support. See what happens. And then these names were simply just like the top two holdings in the Russell 2000, I believe. SMCI in this major triangle, and then MTDR in this inverse head and shoulders. This is just a handful of names. I'm sure I could do more scanning and find a bunch more names that are looking very similar. If any of you in the call right now want to drop something in the chat, feel free to drop some takers and I'll take a look at that as well. I just see M. Carl just dropped in plug. We can take a look at that. Let's see, let's zoom out on this one. I mean, so what you're really seeing right here is a double bottom around 335 and a gap fill at 591 in terms of like a short-term pattern. And then longer term, it's in a little bit of a down-sloping channel as well. So there's just so many names that are really starting to set up at the same exact time. And not a lot of them are large caps. I would say one of the main large caps that I personally like its chart right now is Tesla. But I'm not really looking at Apple, Microsoft, Nvidia, and I'm not the first person talking about this either. It doesn't take a genius to figure it out. We did start to see a little bit of rotation this week from large caps into small caps. It's been a great year for large caps. It's been a not so great year for small caps. And over time, they tend to balance out, not necessarily in yearly returns. Typically, small caps are always more volatile, but over time, if the Russell's going up in a 10-year period, the S&P does as well. Actually, it should probably be the other way. If the S&P goes up in a 10-year period, the Russell does as well. And I know some indices are not as old as the others, but just in terms of parts of the market, usually they go together. NEO, we can take a look at that. Cheddar mentioned it. You say we did. I think I shared this on last week's weekly watch list. It really comes down to the earnings soon, and the $7 support is key. If we take a look at the Hang Seng Index over here, it's still in this wedge, and you just made new lows. So I'm still a little bit weary of Chinese stocks for right now until this breaks out. But that's pretty much the main thing. And then we can go back over to my main view on TradingView. And yeah, Bitcoin, I talked about this breakout throughout the week. Last week, we finally got it on Friday. And that led to a plus 10% day for Riot, a plus 14% day for Mara. And I actually had this 39.7K level charted out. The reason for that is if we go back in time, you can see that this level was a major low from September 2021. And that's the level you actually just tagged today. And probably could break it. I think this can break above it in a few days. You've also got the hidden bullish divergence setting up nicely. Ethereum is, as we are speaking, testing a breakout of this ascending triangle. Am I really not sharing my screen? Oh my gosh, I feel so bad right now. This is on screen one. I'm very sorry for that. I just went through the whole watch list with not mentioning anything. But if you're in premium, you have the watch list, so you could have been looking at the names while I was doing it. Thank you for dropping that in the chat. So yeah, make sure you click the live button. That's my name. Thankfully, this is being recorded, so you can go back and watch the first 6 minutes either way. But Ethereum testing a breakout of the ascending triangle, and also it's just slightly above these highs from April. So I wanted to mention that as well. We really zoom out on this chart. There's not a lot of resistance until 2,500 on Ethereum. You have a couple of lows here, which is why the second target of the swing is sitting at 2291. That's really the main thing to watch. And yeah, the Riot and the Mara swings both, well, Riot hit its first target on Friday, and Mara pretty much hit its second target on Friday as well. So those have been beautiful. Coinbase has been doing amazing as well. I know Mitray's been talking about it a lot. Pretty much what it did on Thursday was it went back down to retest 116-ish, previous resistance as support, with the bullish pin bar candle, and then you saw higher prices on Friday with 150 still as your next level. All right, so that's like the main stuff I wanted to talk about. Also, just a quick little side note, Fisker had a nice little 10% day on Friday. I did enter a small position in calls again. It was still an inside day. I really like the volume here, and they did come out with a little bit of a business update in the morning, so we will see what happens. Overall, I would like to see us get back above this downsloping channel demand line, and I'm sure I've talked more than enough about my thoughts on this, so I'm not really going to do that on this call. But let's get a little bit more into the details, right? I did release 2 new swings for everybody on Friday, and then a few more in premium. The ones I released for everybody, first was ARK, which is really where I want to start what we're going to talk about today. So the ARK ETF has lost most of its value compared to its highs after the COVID crash, which is, this is your COVID crash. Your highs are all the way up here. It looks like the top of the mountain, literally. And over time, you've started to create this potential inverse head and shoulders. So we once again hit $35, which if we go back in time was your COVID crash lows essentially, and also your 2018 lows essentially, a major reversal area for this stock or this ETF. And now it's, in my opinion, setting up for the actual breakout. I could be wrong, but really crossing above 50 on this one could set it up. And honestly, above this zone, I'm going to chart it out right now. Above this zone right here, there is not really any resistance until 72. Historically, we've only done the move twice, straight up and then straight down. There's just not much resistance above that zone I just charted out. So that's the first thing. The second thing, the Russell 2000, I did trade calls on this on Friday morning. I only got a 60% profit, and then it ended up going up like 800%. But I talked about this triangle throughout the week last week, and I was actually bearish on the SPY and the Qs for the majority of the week, even though it was just a flat week for them until Friday, but I was bullish on the Russell. And then we charted this little wedge, and the second this broke out on Friday, it just went straight up. It even had like a little pennant later in the afternoon that I shared in the chat as well. But the bigger picture here is it's now back above the 200-day moving average, okay? And this rally we are seeing after triple classic bullish divergence developed, and you still are in a range between 163 and 199, or pretty much 160 and 200 on the Russell 2000. You're still in a range, but these are some pretty interesting variables for a move out of this range, and honestly, it shouldn't stay in this range forever. We're moving into a new year, and it does not take a lot of a move for this to finally break out, especially when you are also getting a little bit of help from the major indices. Okay, if we take a look at the SPY, as of Friday, you're testing a breakout of this major resistance zone. Getting above 460, there's not much resistance until pretty much all-time highs at 473. If we go over to a weekly time frame, I actually chart this on my SPX chart, you have hidden bullish divergence confirmed. Kind of has a little bit of that cup and handle look. I know, I think AK, you also shared this trend line breakout. There's a lot of different breakouts taking place. Even if we go over to the Qs, right? This bearish shark, technically there's still the potential for it, but if we just take this off the chart for a second, you've got hidden bullish divergence confirmed, and then again, you just have that cup and handle look, and even without all of that noise, you can just look at this very simply. We broke out of a bull flag, and now we're going higher. And Mitch Ray talks about this on his streams, and this derives from other people's work as well, but a lot of people just think that this is essentially the move you get after a bull flag breakout. You go to the top of the flag, which is cool. It's a nice little trade you can take. But a lot of times, a larger move comes when you actually break the top of the flag. So once you break above that point, that's when you can potentially get the larger moves and then maybe retest all-time highs on the Qs if we really get a true Santa Claus rally by the end of the year. And I'm not trying to sound over bullish. This is just the first time we have seen a bullish breakout across the board probably all year. And that sounds crazy to say because we had such a good year, but if you think about it, it was one trade. It was one upwards trade the whole year. It was one trend. You just went straight up and then you pull back for a few months. And now you're getting the breakout of that pullback for a few months. And not only that, but consolidation is good. We just saw about like a 2-week consolidation in the markets. The longer the consolidation, the bigger the move potentially. I talk about that all the time. So I wanted to mention that as well. And these are just a handful of the variables that are setting up across the board that can make for a good time in the market. And it's simple. All of this can fail. And if it does fail, that's okay, because there's simple levels to watch, right? I would say on the Qs, if we break under this low at 383, what I just talked about fails. Think about the risk on that. That's only a 1.5% risk for this to fail. It's not a major risk for this to fail. There's not a 100% certainty that we're going to keep going higher like this, but there's just such a low risk on going long here if you know the clear stop out areas. And that's really the simple part to it. Okay, so these are kind of the major variables I'm keeping a note of heading into the week. I also did get a couple messages I want to answer. Got a few questions. First, what does it mean when a stock dips to grab liquidity before a run? Grabbing liquidity simply in most trading in most markets is just a sharp, quick move you see. It's like going from kind of normal point in price action, low volatility, into boom, like sharp price action, and then it kind of quickly stabilizes back to normal. That typically just happens by a large imbalance between buyers and sellers that appears due to a variety of reasons. It could be to news, it could be to somebody placing large orders, whatever it is. So grabbing liquidity simply just allows for you to visually see where you had an imbalance in the market. Now, on like a more technical level, and delete all this for 1 second. Let's say that we're looking at this right over here. Let's say we're looking at this price action. We're viewing this as a range on lower time frames, whatever. This move right over here, this little dip lower before we went higher, is a good example of grabbing liquidity. Think about it. There was probably a decent amount of people that wanted to go long here at the 200-day moving average back in October, right before Halloween. There was a decent amount of people. And what we saw for a lot of those long traders, on one hand, was a major stop hunt where they're like, oh no, we broke the 200-day moving average. I have to stop out of my long on the SPY. And then you actually go higher. But there was also another amount of people that were like, okay, let's grab some liquidity. let's get sellers to stop out over here so we can buy shares at a lower price. It's very simple supply and demand. The people that really wanted to long, maybe even potentially up to here, were like, now we can go long on a little bit of a discount in a very short-term amount of time. Think about it as like a quick sale, like a flash sale. That's pretty much what it's like. And it can work both ways. If you're hitting a resistance and you up thrust above the resistance for a little bit, there's people that want to short it, right? These people are like, okay, let's take it above the resistance for a little bit so that people can go long on it thinking it's a breakout, and then we're going to drop right back under the resistance and really get more profits on our shorts. So there's ways to utilize it. It works in both ways, but simply put, grabbing liquidity is just seeing like a fake out, but in a more educated manner. And there's a lot of different trading strategies around it. So I wanted to quickly touch on that. What else do I have here? Question 3, you said you're not touching SPY between 2 levels last week. It broke out. Do you think all the gaps have to be filled in? A pullback is imminent this coming week? 5 weeks in a row, big weekly green candles. What's the next resistance? A lot of questions there, but yeah, so I did say earlier in the week, probably that's like a 15-minute chart. I did say earlier in the week I was not going to touch the SPY anywhere in this range after I had a few rough trades, thinking it was going to break out or break down a little bit earlier than it actually did. And it did break out on Friday. I ended up trading IWM and Tesla on Friday, so I didn't trade the SPY, but I was sharing it in the Discord, and there definitely was a multiple trades that were being shown on this, such as like an inverse head and shoulders that was setting up. I shared this in the Discord as well before it even broke out, and then Powell ended up talking and it really broke out. So do I think the gaps will fill in time? Yes, but we're also testing a breakout. I would not even worry about these downside gaps until we broke up below 446 on the SPY. And if you remember earlier in this call, I did the same thing on the Qs, and then I talked about 383. Those are the two levels that as long as we stay above, we're holding above our gap ups from November 14th, and that's kind of where our new mini trend has started since that gap. So as long as we stay above those levels, those gaps are not even in my head because we're not even close to that. A lot of people like will be up at these prices and they'll go like, I don't know, I don't even know if we can find one, but they'll go all the way over here and they'll be like, okay, imagine that this wasn't filled, it kind of is, but they're going to be like, in April 15th of 2020, we have an unfilled gap. Are we going to, I know that's not what you're asking me, but really the way I look at it is gaps really don't matter until you're getting towards them. So that's just how I look at it. And in terms of a pullback, it's a little bit tough to tell because we haven't even broken above highs from last week on the Qs. I know the SPY did, but the Qs have not. And what you're really seeing here on the Qs, which is something I mentioned, is you're retesting these highs from July as a support. If we look at the Russell, this was really your first move. You were kind of just in a pattern, like we just broke out. Could we backtest the 200-day moving average on the Russell? Yes. But for right now, I think the most important thing is to know where the risk levels are. Okay. And then your other question was, what's the next resistance on the SPY? We're still kind of testing the all-time highs, not the all-time highs, the highs of the year from July 27th on the SPY. I think the SPX as well is doing the same. And honestly, your next resistance is 473 if you can clear highs of the year. You have a mini resistance though at 462. Okay. So that's pretty much the update on everything you need to know heading into next week. I do think the picture looks bullish here, and we just got to stay above the risk levels. If we don't, then I'm wrong, and that's okay, but it's a very small risk. All right. So that's pretty much what's going on. Seems like Uber doing something similar to what you just explained on liquidity. I think it may have a bearish divergence. If I'm not mistaken, they just added Uber to the S&P 500. I mean, overall, this is just a cup and handle playing out beautifully. And your next resistance is probably around 60 bucks. But if we go down to like lower time frames, it could, you could be seeing liquidity grab over here if it breaks back under 57. A lot of these things are unfortunately pretty lagging. You really can't tell until after it happens, especially in very strong trends. If this was more of a consolidation trend, like Wyckoff distribution, that's a perfect example of liquidity grabs. If you really want to understand them, I know a lot of people talk about ICT and other different things. I think Wyckoff is the best explanation of a lot of technical variables. Gold is testing all-time highs. I mean, I was talking about silver and gold all of last week. We were looking at metals every night on the stream, so I'm really not surprised. Where's my gold chart? Oh, this looks so different. So here we go. Beautiful. I mean, if we go over to a weekly time frame, you can see it. This is it. You've topped out here 3 times since pretty much fall of 2020, and you're testing it again. You said SLV weekly chart. October 2nd. A great example. Yes, this is a very good example. Absolutely. This is a perfect example of a liquidity grab, spring, a shakeout, a stop hunt. I know people try to differentiate the terms. All of them kind of mixed together. Very good example there. Volume also can come into a part of it. Like, take a look at this. This candle was also your largest volume, really, since the top in May. So volume is another key thing you can watch. All right. So that's pretty much it for this week's call. I feel like we covered a lot in, I don't know, 25 minutes. Thank you all for joining. Should be live trading on Monday morning as well. I'll see you all there, and have a great rest of your weekend.